Good morning, everybody. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we would like to welcome you all to a new week and thank you for joining us on our breakfast meeting this morning. It is Monday, the 5th of July, 2021. As always, this meeting is being recorded and the audio file may be shared with third parties. The meeting is also being streamed live on our Vetiva online face on our The meeting is also being streamed live on our Vetiva online page on Facebook. On our agenda today, we'll get a rundown of the local capital markets from Sheung, a global equities trader, who will talk about equities, and then we will move to Omorige, who will discuss fixed income. After this, we will move to our partners from Ghana, IC Securities, with their own updates, and then we will round up with Temple Asaju from Frontier Africa Reports with their own updates. Over the course of the meeting, if you do have a question, you may leave it in the chat box, or you may raise your hand, and then you will get a chance to ask your questions after all speakers are done. So without further ado, we will now start off with Sheung from our Global Equities Desk. Good morning, Sheung.
Good morning, Chidoze, and good morning, everyone. So we start off in BRVM, where the index ended Friday's session higher, having gained 36 basis points. We saw improved activity level with both volume and value traded increasing by over 165 and 305%, which this was mainly due to the huge volume of trade in the likes of ETI, Sonatel, as well as Uniwax Cote d'Ivoire. Specifically, Air Liquid, Sico, and Cital were some of the gainers on the day. And if you remember, this was just in line with our expectation on Friday, where we anticipated Air Liquid and Cital to drive market performance. On the just to look at the weekly performance, that was last week. The benchmark index ended the week in the red. We saw a 107 basis points week to date return, and this was pretty much. I think this should be the first time in a while that we've seen the weekly return being negative. And unlike the day that ended all the major sectors, that unlike the day where the major sectors all closed higher, it was a largely negative week, with all sectors declining week on week. Yet the return on that market is currently 9.96% positive, so a decent, which is still a decent return for the market. So going into the new week for BRVM, our outlook is that we expect market to remain mixed with alternating days of gains and losses, just like we've seen in recent weeks. Market direction will be largely determined by earnings release, which is what we've also seen in a couple of weeks. Once a company releases the result, we see that demand on such names. So we'll likely continue to see that happen this week as well. So names like Air Liquid, Cital, and Vivo Energy will likely continue to dictate direction of the market. So I think that'll be it for the BRVM. So quickly going into Nigeria, the Osha index ended the last trading session higher with a 3 basis point appreciation. We saw gains in counters across sectors, but Dansem was actually the major contributor. We saw that 403 basis point appreciation after it had moved from the 221 naira level to close at 229.9 naira. Seplat, Access, and Vitafoam were also some other gainers on the day. That the gain in Dansem, Seplat, and Access, they all pushed their respective sectors to a positive close, as we saw gains in the industrial, oil and gas, as well as the banks, on Friday. Market activity, speaking to that ended mixed. We saw volume improving marginally, while turnover declined by over 26%. And it's instructive to say we've seen these couple of in recent sessions where either the volume traded decreases while the value will get some sort of appreciation, or the other way around. So we'll just continue to watch out to see if this trend continues. Just a quick look at the weekly performance. For last week, we saw the benchmark index closed in the green, having increased 147 basis points. That's for the week on week, and all major sectors also closed higher, save for the oil and gas that was down week on week. So going into this week, for us we expect activity in the market to be largely driven by investors positioning in some names that will likely declare better than expected Q2 results or the H1 results. So we'll just continue to look out for that. We believe names in the flour business, sugar, as well as agro-allied space are expected to deliver such impressive results. But for us, overall, the market will remain mixed, both in terms of activity, just like I mentioned earlier, as well as direction, as investors. We also look at booking gains on some names that have appreciated in recent sessions. So those are the things we're looking out for the market, both for today and for the week. Thank you very much.
Thank you very much, Sean. We will now move to Omorige for fixed income and currencies. Good morning, Omorige.
Good morning, Chidozie. Good morning, everybody. System liquidity declined significantly on Friday to open at 36.09 billion negative from the 26.59 billion positive that was recorded on Thursday. This significant decline in system liquidity, coupled with the increased funding pressure on the back of the CRR debit that happened on Friday, drove interbank rate to tighten by over 50 basis points as OBB and overnight rate closed at 12% and 12.5% respectively. Our expectation for today is that interbank rate will trade at lower levels as the funding pressure reduces. The parallel market remains stable on Friday to trade at 503 naira to $1, while the earning window opened at 411.98 naira to $1. The highest rate that was recorded on Friday was 420.95 naira to $1, while the closing rate was 411.25 naira to $1, which is a 55 kobo depreciation from where it closed on Thursday. The meeting between OPEC and its allies on crude output on Friday was inconclusive, as UAE opposed OPEC's plan of increasing supply by about 2 million barrels per day from August to December 2021. On the back of the disagreement between OPEC and its allies, on Friday, we saw oil prices drop after 4 days of gains, as Brent crude oil closed at $76.07 per barrel, which is about 0.13% drop, while WTI crude closed at $75.04 per barrel, which is about 0.16% drop. The T-bills market traded on a relatively calm note to close last week, as market players continued to try to cover their lost bids from the PMA auction last week. Bids seen in the market on Friday were largely skewed to the long end of the benchmark curve, especially on the March, April, and May 2022 papers. However, trades that were consummated on Friday were on the March and on the April and the newly issued one-year paper, that's the June 2022 maturity. Overall, average benchmark rates remained unchanged at 6.3%. The OMO market traded on a muted note with a slightly bearish bias, as we observed interest along the long end of the benchmark curve, with trades majorly debt on the January and the March 2022 papers. Overall, average benchmark rate increased by about 6 basis points to close at 9.51%. The bonds market traded on a very calm note with a slightly bullish bias ahead of the expected inflows from the promissory note maturity that is coming in July 12, 2021, and also the bond coupon payment and the bond maturity that is coming in July 15, 2021. We observed interest on the short and long end of the benchmark curve, particularly on the 2022, 2028, and the 2045 paper, while trades that were consummated on Friday were majorly on the 2045, 2049, and the 2050 papers. Overall, average benchmark rate declined by 2 basis points to close at 12.43%. The local Eurobond space closed last week on a very bearish note, with sell-off witnessed on the long end of the benchmark curve, especially on the 2031, 2032, 2038, 2047, and the 2049. Overall, average rates inched up by about 1.2 basis points across the traded maturities. The corporate space closed last week on a very quiet note, with rates remaining unchanged day on day across all maturities. Our expectation for today is that the bonds market will trade on a bullish note as investors continue to cherry pick attractive offers across the benchmark curve. We expect the TV's market to trade in line with system liquidity today. That'll be all for fixed income. Thank you very much.
Thank you very much, Morgan. We will now move to Daniel from IC Securities with their own updates. Good morning, Daniel.
Good morning, and good morning to all of you. I will start off with the local treasury bill space. Government of Ghana fell short of its target for the first time in 4 weeks, as it raised 735 million Ghana cedis at Friday's 91 and 182-day bills. The target amount was 1.18 billion Ghana cedis, which means that government managed to raise only 62% of its target amount. Yield for the 91-day bill dropped by 3 basis points at 12.59%, while that of 182-day bills remained unchanged from the previous treasury bill auction. We reckon that the reduction in treasury bill participation is as a result of mopped up liquidity on the secondary market. On Thursday, there was a cocoa bill auction, which means that investors didn't have enough funding to participate in the treasury bill space. On the local currency bond market, secondary market started the second half of the year on a fairly active note, with few selling interest around the front end and the belly of the curve. 2026 maturities dealt at an average yield of 18.3% on Friday. Additionally, we saw offers around the back end of the curve with no bids to match. We expect to see improved secondary market activities this week. And finally, in the Eurobond space, sub-Saharan African markets started the second half year on a sluggish note, trading downwards averagely across the curve ahead of the OPEC meeting and the release of the US job data. Ghana bonds joined the trend on the back of that, as the belly at the back end of the curve also traded downwards between 150 basis points and 200 basis points. That's all for fixed income. Thank you.
Thank you very much, Daniel. We will now move to Johnson, who will cover local equities in Ghana. Good morning, Johnson.
Hi, good morning. Good morning to you all. In equities, bullish investor sentiments across the local best back market growth for last week's session, recording 3 gainers and no losers. Societe Generale and Bob advanced by 2 pesos each to close at 92 pesos and 217 pesos respectively. ETI completed the gainers chart as the ticker gained a peso at close at 6 pesos. As a result, the composite index closed higher, the year-to-date return of 36.6%, up by 8.61 points from the previous week's close. Activities in MTN Ghana regained momentum for the week under review as retail market participants sought to reposition themselves for the month end. We maintain a positive outlook for the medium term, given the revamp in buying interest across the consumer and financial baskets. Activity on the bears is also tipped to remain lively for the week ahead. for the chance of markets closing further up, given the lurking investor demand, particularly around FML, ETI, BOB, Enterprise, and Societe Generale. Thank you.
Thank you, Johnson. We will now conclude with Temple Asaju from Frontier Africa Reports and their updates. Good morning, Temple. Okay, it appears we are having technical issues with Temple. We will go to Boston, who will help us with their updates from Frontier Africa Reports. Good morning, Boston.
Yes, good morning, everyone, and welcome to today's briefing. I think I'll quickly run us through a few issues, but again, as everyone will expect, the whole virus vaccination in South Africa remains a very difficult issue, which the authorities are trying to resolve. So as we are today, the South African authorities are making all the efforts to ensure that they get the deal with the AstraZeneca and Johnson & Johnson together to make sure that the vaccine is available and they can be able to cut back on the infestation's footprints. There are a few other countries within the region are facing similar pressure, like Namibia as well as Tanzania and Uganda. But the story from the economic side of this was that the lockdown that the authorities imposed a few weeks ago by Mr. President to level 4, which affected the alcohol. The Brewers Association has taken the government to court. They are alleging that the government does not need to ban alcohol sale or movement of alcohol in order to ensure that people are not infested with the virus. So SABMillers, which is one of the largest brewing companies in South Africa, is the one leading the court case against the government, and that has already been established. Then within the aviation industry, the group of the local air operator, ComAir, is looking to is from today suspending for 3 weeks all British Airways local flights in South Africa, and those who are booked on kulula.com will have to make further rearrangements. In other news within the continent space, part of what we gathered from this from the Minister of Finance, Nigeria's Minister of Finance briefing last week of the National Economic Council on Friday, was that the central bank, there's been an arrangement between the government and the central bank to start refinancing debts for state governments. That came a little bit from the Office of the Vice President media team on Friday. That an arrangement has been reached. The deductions from state government FAC will continue, but the central bank will help the states to start refinancing their debt. In other words, there's a window of financing that will keep the state government from going into further financial difficulties. That is now being arranged. We don't have full details of that yet, but that came from the media statement that the Office of the Vice President actually released. The cost of airtime had gone up in Kenya because of the excise duty, which is raised from 15 to 20. So telcos are now charging about 2 shillings 78 per minute, and that is going to put a whole lot more pressure on folks within the Kenyan market. How that will impact on their earnings going forward from the third quarter, fourth quarter, we'll wait and see when the numbers start coming through. Then the AFDB released a new document, a new framework over the weekend, just around Friday, that spoke to the level of debt by African sovereigns, of course, which include Nigeria. About 24 African countries have now lined up under the G20 DSS debt suspension initiative program. The framework released by the AFDB is to help African sovereigns to start streamlining their debts and see how they can transit from the current heavily indebted situation to a less indebted situation. That I think everybody will be studying that across the various economies and sovereigns and see how that will impact them moving forward and how they will try to adjust. That sums it up for us on this side from Africa Reports for this morning. Thank you, everyone, and have a great week ahead.
Thank you very much, Bosin. We have now come to the question and answer portion of the meeting. If you do have a question and would like to speak, you may raise your hand and you will be asked to unmute your mic so you may speak. Or if you would like to use the chat box function, you can do that. And this is the same for those joining us on Facebook. Thank you. Okay, it appears we have no questions today. If over the course of the day you do have a question, don't hesitate to send us an email at research@vetiva.com and we will respond as quickly as possible. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, we would like to thank everyone for joining us today, and we look forward to having you join us again tomorrow at 8:30. Good morning.